Welcome to the weekly market recap with SC Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. Sri Lanka's Purchasing Managers Index for February points to continued growth in both the manufacturing and service sectors. The manufacturing PMI climbed to 56.8, indicating sustained expansion across all key areas. A major driver of this growth is the food and beverage manufacturing sector, which is ramping up production to meet rising demand ahead of the festive season. This has led to an uptick in new orders and production activity. Employment and stock purchases have also increased as businesses make strategic adjustments to keep pace with growing demand. However, supply chain pressures are mounting with supplies' delivery times extending. Meanwhile, the services PMI also showed expansion, signaling broader economic activity and recovery across key sectors. Overall, these trends reflect a resilient business environment with firms scaling up operations to seize emerging market opportunities. The government is taking a significant step toward tax reform with the appointment of a new tax committee. This initiative is part of a broader plan to introduce a national tax policy aimed at improving Sri Lanka's appeal as an investment hub in the Asian market. President Anrakumara Disanayake, in his role as Minister of Finance, Planning and Economic Development, secured cabinet approval this week for the committee's formation. It will function under the guidance of a Deputy Secretary to the Treasury. This move is expected to lead to a more transparent and affordable tax structure aligning with the government's vision outlined in Budget 2025. The plan also includes new tariff rates designed to streamline the importation of high-quality raw materials. With these reforms, the government aims to create a more predictable tax environment, fostering confidence among investors and businesses. Sri Lanka's investment potential was in the spotlight at a high-profile business roundtable in Washington, D.C. on March 11th. The event, organized by the U.S. Business Council for International Understanding in collaboration with Washington Global Advisors, brought together with 25 corporate representatives, including former U.S. ambassadors to Sri Lanka, who now serve on major corporate boards. Participants showed renewed interest in Sri Lanka, particularly in light of recent political changes and the strong anti-corruption stance taken by the President Anrakumara Disanayake. The ambassador emphasized that the IMF views Sri Lanka as a model for economic continuity and private sector-led growth despite political transitions. Sri Lanka's key investment advantages were also outlined, including its 92% literacy rate, the highest in South Asia, a skilled workforce, and a strategic location along vital Indian Ocean trade routes. Constitutional guarantees for foreign direct investments further strengthen investor confidence. A key takeaway from the discussion was the government's commitment to digitalizing the economy, ensuring a level playing field for foreign investors, and maintain transparency in all dealings. This vision, combined with opportunities in state-owned enterprises through public-private partnerships, appeared to be a strong attraction for U.S. companies considering investment in Sri Lanka. Sri Lanka has taken a significant step towards issuing green bonds, securing the mandatory second-party opinion required for the process. This was confirmed by Finance Ministry Additional Director General Visakha Amarasekara at a forum organized by the Asian Development Bank in Colombo. The additional director stated that an official announcement is expected in the coming weeks pending cabinet approval. Once finalized, Sri Lanka can leverage this framework to issue green bonds when it is ready to re-enter international capital markets. Under the ongoing IMF loan program, Sri Lanka is projected to access global capital markets by 2027. This includes updating the green finance taxonomy introduced in 2022, which helps assess the sustainability of various business activities. The central bank has been working on a sustainable finance roadmap since 2019 and issued guidelines encouraging commercial banks to invest in green bonds and fund eco-friendly projects. Many listed banks have already raised capital under this initiative. With these developments, Sri Lanka is positioning itself as a future player in sustainable finance, reinforcing its commitment to environmental and economic resilience. Let's take a look at this week's Treasury-bill auction results. With the recent Treasury-bill auction, the 91-day T-bill rate stands at 7.50%, down by 2 basis points. The 182-day T-bill rate stands at 7.84%, down by 2 basis points, and the 1-year T-bill rate stands at 8.25%, showing down by 9 basis points compared to the previous week. Thank you for watching. We'll be back next week.